What's up everyone, it's Scotty with MoneyVest. So in this video, we are going to be talking about the upcoming week. It's going to be packed with some earnings, and we do have some economic data that's also coming out. So in this video, I'm going to break down every single piece of catalyst that is going to be important for next week, because we do have the GDP numbers and we do also have the core PCE, the personal consumption expenditure, and the regular headline PCE, which is the Fed's most important indicator as well. So we're going to break that down. We're going to talk a little bit about the technicals as well. As always, if you enjoy this video, find it helpful, make sure that you drop a like and of course subscribe to the channel. If you're just joining us for the first time, I would really appreciate your support. And again, don't forget the links to our Discord and Patreon is going to be down below. There is a 16% annual discount that's available till the end of this month. And of course, you can access all the members only private videos. You can access Excel spreadsheets, Discord access, Discord channels, including trade alerts, trade ideas, market updates, analysis, engagement with over thousands of traders and investors worldwide. So everything's going to be available down below. And most importantly, we've got our big sale going on right now for Cyber Monday. So our courses, and more specifically this bundle, which is the 4-course bundle, including fundamental analysis, technicals, options, and psychology, currently 70% off. This is the biggest sale of the year, and the coupon code is going to be Cyber Monday. So definitely do make sure to check that out. This is a one-time deal. You pay once and then you get lifetime access to all 4 courses and all the spreadsheets and downloadable PDFs and cheat sheets, and all additional content that I will be adding is going to be available for free. And more importantly, your family enrolls for free. So if you sign up and you want your parents, your kids, your siblings to get access to this course, just email me and you will have free access for your family for a lifetime. Link's going to be down below. Coupon code Cyber Monday. TradingView also has a 70% off, and I know sometimes this gets a little bit longer, but it's important because right now there's holidays and there's big deals. Cyber Monday sale for TradingView, 70% off. Link's going to be down below for that as well. So going over to the earnings season, right? So earnings season is still going. Next week, I think, is going to be very, very important for cloud and for cybersecurity, because we do have companies like Zscaler. I did a video on them earlier. We also have companies like CrowdStrike, did a video on them as well. Workday, Intuit are all reporting, along with HP is reporting on Tuesday after the bell. Wednesday, we've got, Foot Locker, Dollar Tree, we got Farfetch, we've got Petco also reporting, and then finally Snowflake, we got Salesforce, Okta, and Five Below are also reporting after the bell. Thursday, we've got Kroger, we got TD Bank, we've got RBC Bank, and then after the markets close, we got Ulta, UiPath, Dell, we got Samsara. And that's pretty much going to be it, right? So I'm going to be doing a lot of analysis on these companies like Ulta. I still have to do an analysis on them. Salesforce, I will be doing a video on them as well as UiPath, Samsara, and Marvell and Kroger. I will be doing a video. So I already did a video on Snowflake, CrowdStrike, Zscaler, Okta. Did a video on those. Definitely check them out if you haven't already. But the rest, we'll be going over them later. So we do have the 2-year note auction and the 5-year note auction, and these yields have obviously been very, very high at over 4.95+%. We got the building permits, we got the new home sales for the month of October. It's going to give us a little bit of an insight into the real estate market over in North America, especially in the US. And we got crude oil inventories, and more importantly, we've got the GDP numbers for the 3rd quarter coming out on Wednesday, November 29th. The expectations are, once again, 4.9%. That was, again, a very, very solid number. And we've got retail inventories. We've got FOMC members talking, including Waller. We got Bowen. And the 7-year note auction is going to be happening at 1 p.m. Eastern on Tuesday, November 28th. And that's going to be 4.9% expectations for that yield. Now, this right here is perhaps the most important catalyst, because this is going to be this PCE number. That's a personal consumption expenditure. And this basically accounts for, inflation. That is what the Fed's preferred measure of inflation. And the expectations are going to be, I believe, 3.5 if you go back. Yeah, so the forecast is going to be on this column. So we're looking at a forecasted number of 3.5%. That's going to be lower from 3.7. And core, that's on a year-over-year basis, core. And core month-over-month is 0.2%, with initial jobless claims expected at 218,000, with headline PCE expected to come down from 3.4 to 3.1%, and month-over-month expected to be at 0.1% as well. So that right there are going to be some of these expectations. And then now moving forward, we've got this right here is going to be S&P Global US Manufacturing, 49.4, so expected to once again dip below that 50 mark. Every time this dips below the 50 mark, we know that this is a little bit of contraction, and this is a bit of a recession indicator as well, as we have learned in the past. Historically, every time this PMI, this is the Purchase Managers Index, drops below 50, usually represents a little bit of a recession indicator as well. So if you move over to the market, we've already talked about where the markets are. I did a technical update on the overall market, so definitely do check that out. But going into next week, we've got a big resistance for the S&P 500 at 4,600. So that's really the level that we are watching right now. Maybe there's another 50, 60 point rally the markets may have going into next week. And the NASDAQ here is going to be a resistance that we're watching at 14,400. This has been 4 consecutive weeks of green for the S&P, for the NASDAQ, for the markets in general. We've seen a very strong rally to the upside, but I've done several analysis in the past going over how volatility is low. We're trading at a very, very low VIX number, which on a percentile basis, it's trading at now less than 14 percentiles. The volatility has dropped down to under 13, with the spreads, right? The bond spread between the 10 and the 2-year continues to move up, but it's been a little bit more volatile given how many auctions we've had, and the fiscal deficit continues, and there's more supply of bonds kind of hitting the market every single week, every single month. Not to mention there's a tug of war between the supply of bonds, which is coming from all the fiscal deficits, and the Treasury Department, which is issuing a lot of those bonds. But at the same time, there's the hedge fund market, which is covering a lot of these net shorts. And as a result, they're creating this demand. And because they're covering, bond prices are going higher, but they're also going down because of the excess supply. So that's why it's been a little bit more volatile. But volatility is low. Market breadth is very overextended to the upside, because I talked about this in our previous videos, talking about how majority of stocks in the S&P 500 are now trading back above their 20-day moving average, not to mention 50-day moving average as well. So a lot of these indexes trading above 76, 78, 90% are ones to look at as well, because we are going into next week with a very overbought, overextended market. And from a risk reward standpoint, there is possibility for a bit of a pullback. Of course, are we going to see that? Nobody knows, nobody can predict, but the risk reward certainly is not set up in the favor of longs or in favor of bulls going to next week, considering how much we've already seen a rally in 4 consecutive weeks. So I hope you guys enjoyed this video and found it helpful. Let me know your thoughts down in the comment section below, and what do you think about the markets going into next week. Earnings season is going to start to wind down a little bit, so we're not going to obviously see as many earnings anymore, but it's going to get more and more interesting, because we've got the last Fed meeting in December, and they're also going to release the summary of economic projections, which is going to give us a little bit more guidance with respect to interest rates. And that's really what the market's also pricing in: 3 cuts starting in June of next year, and settling down at 4.5 to 4.75%. So we'll find out eventually whether the market's right or the Fed's right, and whichever way we kind of lean towards, the market's going to respond appropriately. So hope you all enjoyed this video, find it helpful. Make sure that you drop a like. Don't forget to subscribe to the channel. Also, don't forget Cyber Monday sale, 70% off from TradingView, 70% off for our course of fundamental analysis, technicals, and options and psychology course. The entire bundle is going to be 70% off. Coupon code is Cyber Monday. This does expire Tuesday morning, so Monday night this coupon code will go away. So link's going to be down below. We'd love to have you on board. And as always, happy investing. I'll see you all in the next video.